guys, good morning from here. So I would like to do an analysis based on one of the major pairs that we have in the forex market, and that is the Euro USD, the Euro dollar right here. So I wanted to ignore the noise. These are the reasons why I don't record in the morning. I like to record at night, where the neighborhood is quite during the day everybody's always busy, and there's always noise during the day, so I would like you guys to ignore any noise that you will get to hear. So now we are looking at the Euro USD. So we have already done this analysis countless and multiple times of where price could likely be drawn to. Alright, so I'm looking at the dollar index right now. I already explained whatever happened right here, where we took our liquidity from the sell side, and we are likely to be drawn to the liquidity to the buy side, where we're having the buy side liquidity pool, which is known as the area of resistance. That is my main focus right now, because right here I'll be looking and would like to explain a lot of things to you guys right here. So I'll be deleting everything right here from the chart, and now we are going to focus right here on the dollar index. Alright, so right here I can actually see what is printed right here, and you actually see what the market did right here. We actually have a range market right here before the impulsive move higher, and then we have another range market right here. So this right here is now considered as what we know as a theory range. Alright, so I've already done this a long time ago. I've already predicted this chart a long time ago from the month of February right here, and you actually see what happened in the month of March. And we rally, we retrace backwards, and if we actually get to notice that when price took out this low, this monthly candle low, it didn't go below this candlestick. It didn't go further below. So we are still in this ranging market, and while ranging, we are actually seeing a bullish structure going higher, right? So now the first thing I'm now focusing on right now is the area in which we are having a swing low right here. All right, so we have like to show that to you guys using I think this right here. So we have swing low. And what do I mean by swing low? What I meant by a swing low is a situation where you're having this first candle, and the first candle gave you wick right here. So that's what I was focusing on. And then the second candlestick appeared right here, and let's just say that we have the candlesticks below right here also. So we have the candlestick below here, and then we now get to see another candle open again, and then the candle gave us another swing low right here. So this right here is now has a swing low, focusing on the three candles. So the three candles, we have this first one, we have the second one, and then we have again the third one. So this right here is considered as a swing low, and we're paying attention at this high to see if actually this candlestick traded higher above that high. So we are considered as a swing low, and lower time frame, that is a series of higher highs and higher lows. So that is the focus right there. So now, apart from identifying the swing highs and the swing lows, looking at this, you can actually see the range of markets. You know that this right here is what printed your algorithm theory range. Alright, so this right here is the month of May. June opened. You can actually notice that when June opened, we didn't go below the month of May, right? So we now label that as May right there. So we didn't go below May, and June went higher. July opened right here, right? So we have the month of July. Sorry, why does my chart shows me? All right, so this is the month of July right there. So this right here we now label that as July, and this month of May, let's take the text below so that we can actually identify that of June. So the month of May should stay below, and we now have the month of June. Now you can actually see that this candlestick each month they are going higher, refusing to go below the sell stops. So you actually know that this is a bullish structure. If I have to run down to the lower time frame, you can actually see there is a series of higher highs and higher lows. So the chart is kind of like telling you the reasons why it refused to go that low. Alright, so is protecting every sell stops, right? So now we do know that we have relative highs here previously, even if we go down to our lower time frame. So we still have the relative highs right there. So Rabbit there has a bad side liquidity pool. All right. So now I want us to take note of what happened on the month of June, July, August, in the month of August. And you get to notice that, like I said, I don't know if I've said it in the previous videos, but I talked about all of these highs and lows printed every month is done at the first week of the month or the last week of the month. You get to notice all of those highs and lows, and you get to observe the first week. So I likely don't trade for the first week of the month due to the fact that we have NFP and stuff like that. So I'm just going to study the chart, see what happens if it actually goes below the lows of previous month or high above the highs of previous month. Now, for sure, truthfully, we took liquidity from the buy side liquidity, right? Now, when July took liquidity from buy side, that was previous 3 months high, right? It didn't go to deliver the price to the previous 3 months low, like the sell side liquidity pool, right? It's always been protecting every sell side. All right. Now, if I have to count 12 months, also you have to count 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. You can actually see we are far away from previous 12 months. And you know that there is nothing right here that could actually lead to a rejection of price at area of other blocks, supply and demand, even though I know that there's a volume imbalance right here. So to me, I think price balance the gap right there. So the idea is to still see the euro go higher to these highs that we have right here where we have the liquidity pool. So now, after seeing this on monthly time frame and observing that price didn't go below all the sell stops and it's been going higher and higher, and the interesting part is seeing that the month of August didn't go below previous month low. That is a very interesting thing I focused on to see. So now I hope that you guys also have to notice all of this stuff and analyze them. So now I can safely go down to the weekly time frame to observe what is actually happening on the weekly time frame. Now this is it on the weekly time frame. You can actually see how clean it's been looking, and you can actually see that all of these months has been protected until I get to see this August go lower. But since then I haven't seen that. And you know the structure that I've been printing right here. You have been printing series of higher high, higher low, higher high, higher low, and we now have another higher high. Now the idea is to see a higher low and then continue this bullish structure of higher high. Now I will never say this market is bearish until it validates this low right here on the month of May. So I'm saying, all right, then that means I have to go. The market has shifted. We wait for impulsive move backwards to an area of supply that might be printed right there, and then we're looking for sales. That is my trading idea. That is my approach to the market. So I don't know for you. You could possibly be having a sell entries like scalp and counter trade or day trading like that. But to me, I'm focusing on what the higher time frame is giving to me. All right. So now seeing this on the weekly time frame, and also I did know that we have a fair value gap right here. You actually say you had a fair value gap right here. Price didn't trade backwards to the fair value gap, and that is fine, as we also did see that the price has finally broken structure. So I'm having the idea that if price has to retrace backwards, it's likely to retrace backwards to this other block that was responsible for the positive rally and breaking structure, as we could also see that price mitigated also this other block right here. So there is a confluence that you're having a series of higher highs and higher lows, price mitigating this area of demand and rallied higher, and we now have another area of demand printed for us right here. That right there is an other block that we're expecting the price to trade backwards into, which has a confluence of giving us a fair value gap right there. So it's a clean setup for me, and now I will likely go to the daily time frame to see how it looks like. But my main idea is looking at this as my entry, as it is at a very discounted price, and this right here could be seen as an inducement. So price could grab that liquidity and trade into my weekly order block, in which I'll be expecting to see a confirmation entry to buy. So right here we have the daily time frame right here on the daily time frame. So you actually see the daily time frame traded into the weekly time frame order block. The confluence also is that it traded this right candle right here is our order block, and it traded into a fair value gap that failed. So we see that has IFVG. All right, so it retraces backwards to the other block on the monthly time frame, conflicts with the fair value gap, and then it traded higher. Right, so for the idea, for the market having the idea that it needs to go higher to be drawn to the liquidity, you can actually see that when it traded impulsively higher, we saw that it led behind a fair value gap. So taking this off, and then you can see it led behind a fair value gap. Now for it to quickly be drawn to that high to gather liquidity, as we are trading with the algorithm D range, it needs to trade backwards to the fair value gap. You can actually see trade the fair value gap, and it mitigated a 4-hour supply right here. And there's something about candlesticks looking like this, the waves crossing each other, is seen that has a hidden base or hidden other block, and is also identified as a king. All right, those that trade king out, they say is a king and stuff like that. And it's the same thing that is being found right here. Also, there's a king structure right there. So now we rallied higher, and we finally have the breaker structure. We took out the liquidity from this high, and then we took liquidity also from that high. Now I know that most of us are likely to see a sell right here on the forward time frame at another block right here, but I myself will not likely be looking at that for the reasons that I see that price also traded backwards to this fair value gap. All right, so expecting that price we do the same thing it did right here. So we traded higher, we traced backwards the fair value gap, and we're expecting it to continue going higher to be drawn to this high and liquidity right here that we have above right here. So now about this structure you're seeing here, and about this impulsive rally you're seeing here. So the reason why I was looking for sales was the price created an imbalance. So the idea I'm having is that since prices, I know on the lower time frame we're having this series of lower lows and lower high, trading lower. To me, the idea is that the reason why it's doing that is to balance the gap right here. I think the last video I posted, I explained about imbalances and stuff like that. So since we are having imbalance right here, supply needs to balance the gap, since there's only buying pressure that occur right here. So there's no selling pressure right here. So that is an insufficient of price. So we're having a buy side imbalance, buy side inefficiency, sell side imbalance, and stuff like that. That is the BC. So, but then we call it a buy side imbalance. So the price needs to sell down to balance all of these gaps, and you can actually take note of what is happening right here. Why it was trading lower to balance the gap is also balancing itself right there, right? The sell side is balancing itself. You actually see the candlesticks and the wicks balancing itself right here, including the basal liquidity. So supply is trying to balance and be equalized with demand. So now we finally trade to the last point of area, which is the fair value gap right there, the last point of imbalance, which is the fair value gap right there, and you can actually see that it traded into our 50% fair value gap, which is resting right here. So you can see how it traded to consequence encouragement, which is our 50% of the fair value gap right there, before it finally rallied higher. And this rally that occurred right here, you can actually know is the first week of August, and you know it's NFP, and you actually see that it actually failed to take previous month low. So you see that whatever I'm teaching right here, I've done my research, I've studied all of them, and I know that all of these stores, all of the shifts of the highs and lows, the failed highs and lows, they are going in the range, they are all done on the first week of the month or the last week of the month. You can actually see right here, this high was on the last week of April, and we finally traded higher. Now this, the last week of April, and we finally entered May. And this right here is the last week of May. You see that already higher, trade backwards to 50%. What I mean by the 50%, I think I've taught this on YouTube. The delivery range of this high and this low. Now that is our institutional price delivery algorithm. That is the delivery range. Now if price happens to trade above the 50% of your range highs and lows, it's likely to retrace backwards. They use that area as area of support to trade higher, to be drawn to the range high of your daily range highs and lows. Alright, so it's kind of like graining right here, so it's gonna be noisy in a way. So now we are now having another structure right here. Now also, this right here is a very small structure. You get to talk about the range also, but you actually see that it's finally traded above that high. Now it trades backwards again to the 50% of our daily range, right? So that means the idea I'm having right now has all of this as a confluence, is that it has to go higher. All right, it has to go higher since we have done balancing all of this gaps right here. And also about talking about the structure is very, very important of these structures and confirming the market shifted from bullish to bearish. Market is shift from bearish right here. You can actually see that from the daily time frame. Now, if market is going higher and creating higher highs and higher lows, right, we're having sell side liquidity and we're having sell stops and buy stops. Now, for the market to should bearish, right, the first thing it has to do is change of character, right? So the change of character is the first sell stop of our higher low. That is a change of character that it took. All right. So let us say we have a shifting market structure, so it's a failed high. Now the expectation is to see that price also trade lower to take on this low, and that will be identified as a break of market structure, the BMS. Now, since it has taken that low, it has retreated backwards to the supply responsible for that. Now, for the algorithm to be drawn to other opposing side of liquidity to be bearish, that means it is now drawn. The reason of why it has to go bearish is that it has to go lower to take every sell stops that it left behind, and all of these sell stops are the the higher lows. So it goes backwards and it takes sell side from this low right here. So it did a break of structure right here, right? So it did a break of structure right here at first, and then the next thing it did was to take out this sell side liquidity. So that is a break of market structure again. So that right here is now a break of structure right here after a change of character right here. Sorry, I will not likely call this a change of character. This right here will be my change of character. And then we have a break of structure right here, and this one is a break of market structure. So now price, what the algorithm is doing right now is taking sell stops, every sell stop, two sides of the market, right? So it has to pull back again, to the area of supply, come back again, take liquidity from here, break of structure, take liquidity from here, break of market structure. We're having it drawn to both sides of liquidity, taking sell stops. Now, for the case of the candle of the chart just trading higher like this, creating a buy side imbalance, now the price is trading lower. You can actually observe that the only thing it's doing right here is taking sell stop from lower lows. So what is doing right here is breaking structure, taking sell stops from lower lows, and it's not taking any liquidity from the other side of the market that it could grab, and like it draws liquidity, it trades backwards, withdraw to liquidity. So take liquidity, retrace backwards, and be drawn to liquidity. Now, there is no sell side is taken from the left side of the market. What it's actually trying to do right here is balancing imbalance, right? So that's the reason why it has to retrace backwards to balance the sell side also, while also balancing the buy side liquidity. That is how I study the market. That is how I get to conclude that this is how the market is. So from there, what you are now having is just a single structure. A single structure of what? Higher high, higher low, higher high, higher low. That is what I'm having, the idea I'm having that the market is doing. Alright. So now we trade backwards to the 50% of fair value gap, and that was the first week of the month of April. And the month of April didn't take out the month of July. So you can actually see that the month of July traded into the other block talked about. You can actually see this another block, which is the hidden base, and it rejected out from there. Now we finally trade backwards again. You can actually see the candlestick pattern also known as the hidden base, also known as the king. It trades backwards to that area. So the candlestick pattern is at that 50% of the fair value gap in which we are talking about. Trade backwards to it after grabbing liquidity, and also balancing the gaps, like balancing the buy side. So now my idea is what we're having right now is higher high, higher low. The next idea is to print another higher high. So right here, the 4-hour time frame is just printing lower lows and lower highs, stuff like that. And so now you will likely print this as a breaker structure, right? So I know that you are looking right here at the, as an area of other block you are likely to sell from, right? But did you ask yourself this question? Did it mitigate any previous other block? And I know it's kind of like took liquidity right here, but this is not a strong liquidity grab. It is still a relative high to me. And also, you have imbalance above you. All right. Now, other block should mitigate the previous other block, or it should clear imbalance. If not, price will likely go above the other block, so that it could trade into the gap right there. It could balance the sell side right there, right? So after we tap the fair value gap, if you run down to lower time frame, you actually see the price accumulated right here. And during the news impact, we finally see that impulsive rally right there, and the rally led to this structural break right here, right? So when price traded into the 50% fair value gap, which has the base right there, like a rally, base rally, so mitigator right there. And when you did that mitigation, we have a stop hunt right there, right? So we finally have the breaker structure, and we have that impulsive rally right here, and now it slowed down. So the idea is when the market opens, we likely see a trade to fill this imbalance. Then possibly we see if we have to print a structure for us to go higher. All right. So right here, you can actually see all of this is a sell side imbalance, and can actually see a point of area where we say that you would like to sell from. Looking at this chart right here, and also seeing this has what a basal liquidity pool, you can actually see that this right here is a resistance area. All right, that is not a stop hunt. Okay, so running down to the 15 minutes, you actually see where price traded into. Price actually the news impact, it was resting at this other block, so it used that other block to trade higher, and for it to break structure right here. So I don't love seeing this kind of candlesticks trading higher, and the news impact stuff, I don't trade those candlesticks imbalances creating, because this new impact, it is the news impact that created that imbalance. And right here, the same thing that I called right here is the same news impact, and stuff like that. So when the week opens on Monday, we don't have to trade on Mondays. We have to see what Monday have to do. That is, we already know that Monday always creates consolidations. So on Tuesday, you will likely see what happens on Tuesday. If Tuesday we have to break Monday's high, then I could possibly be looking for to see a smart money setup, to look for a buy entry to enter a buy on EURUSD. So for now, I'm not looking at here for say entries, because I don't trust this. I experienced this a lot of times. For example, if you go to synthetic indices right here, one setup I saw what is it called on the step index, you can actually see right here this other block right here. You can actually see the other block failed right here. So the idea is you marked breaker structure right here. Now this same thing I explained previously on what's it called VIX 100 posted on YouTube. Actually I say that this right here will not be considered as a breaker structure. That what I'm seeing right here is price creating a significant support resistance, using that sell stop to create a significant support and resistance. Now you actually see this right here, and the next thing you actually see was that it did a stop hunt, right? And after the stop hunt, we actually see the significant support resistance, and we are now left with another block right here, and this other block is responsible to violate this other block, right? And violating order block, it gave a break to structure right here. And after the break of structure, we have liquidity printed for us right here, liquidity pool right here. Now, another reason why this order block failed is also we have liquidity that is being drawn to, and right here, trying to see if we have a buy setup on step index. So we're waiting for the price to get right there. So also on the daily time frame, you can actually see that when price traded lower, it didn't break this low, it created fell low. So now we have to see what happens. We see if price, and you actually see it trading to a favorable gap, but it balanced the gap right here, and expecting to see a buy entry. I'm taking profit right there since we have liquidity pool right here. Also going to the weekly time frame, you can actually see that what happened with weekly time frame is hunt right here, and also the hunt right here. There is no clear structure. Also because this is right here is a choppy market and stuff like that. So also to cut the story short. You actually see it is always happening everywhere. Liquidity right here, break of structure. You see that's a break of structure, other block, and it failed. So that is all the stuff you need to know. So leave them always on your chats. On the yeah. So see you guys later on. So take care and be safe.